tell us what your view of forecasting is and maybe what forecasting isn't.
Reporting the news that's already happened is not the same as predicting what's going to happen. And that comes from a lot of work, granular work from a sales standpoint and total go-to-market standpoint. There's a bottom-up component to it where things are getting rolled up, but there's a lot of work that needs to happen from a management scrutiny standpoint and qualification. And it really starts with the foundation of what is the sales process, how granular from a stage gate standpoint, driving that process, and then digging into that process and being able to qualify whether you've earned the right to advance the next step of that process, not just across the business, but down to each individual account.
It doesn't matter where you are in the revenue organization, not knowing your forecast has dire consequences. But the forecast isn't just a number that you call in a meeting or an outcome at the end of the quarter. It's the fundamental business process. You have to know, are you going to meet, beat, or miss on revenue? If you can't answer that question, you're likely a victim of revenue leak. Today's guest on the Run Revenue Show is Mark Cranney, an investor, advisor, board member, and go-to-market executive. He's got a lot of thoughts about getting your forecast right and the serious implications of getting it wrong. Stay tuned for the advice he's giving the companies he advises to help them weather economic uncertainty and come out stronger on the other side.
I'm Kyle Coleman, sales pro turned SVP of marketing at Clary. Run Revenue is the show where revenue pros learn to stop revenue leak, achieve revenue precision, and grow their companies and careers.
This is Run Revenue Show with Kyle Coleman.
Welcome, everybody, to this episode of the Run Revenue Show. I am so excited for today's episode. We have Mark Cranney here talking all about this topic, control or be controlled, how to do sales forecasting the right way. Mark, welcome to the show.
Thanks for having me, Kyle.
Give us the 60-second overview of who you are, where you've been, and what you're up to now.
Well, I came out to Northern California from Boston. I was with PTC, so kind of the founders of the whole medic opportunity qualification process. I was recruited out by Ben Horowitz, Mark Andreessen to do a company as a VP of sales field ops for OpsWare. And that subsequently sold to HP Software, did some time there, did a big data startup. And then I joined Mark and Ben after they started A16Z as the founding operating partner for the market development program. So worked with a lot of the portfolio companies, helping them accelerate their time to market across the board. Spun out of A16Z and did one of the portfolio companies as a COO, Signal FX, subsequently sold to Splunk. Did one other A16Z portfolio company, Skydio, autonomous drone company. And since I left there, I've just been doing some seed investing and board work and GTM advisor work.
Beautiful. Thank you so much. And you have maybe the strongest opinion I've heard anybody have on this topic of sales forecasting. Why is that? You've held a couple COO roles, been through a couple M&As. How did you develop such a passion for forecasting?
Well, it's the quickest way to get, a bullet if you can't do it, if you're a revenue leader. So if you want to, get and stay in the seat, you better be, exceptional at it to the point of unconscious competence. So if you're, struggling with that, you're just not going to last very long at any level, whether it's as an individual contributor, as a frontline manager, second, third, however many levels of management. And it's not just the sales. I mean, a lot of people, want to hold the revenue leader or leadership 100% accountable, but, you got to look to the left and to the right in the go-to-market process. Your VPs of marketing yourself, the CMO types have got to be extremely competent downstream on the customer success side. Everybody needs to, contribute and extract the forecast, as well as the CEO and the bean counters, the CFO and finance teams, right? So it's the most important thing we'll do as the revenue leader is be able to accurately forecast good news or bad news.
And this is the insight that so many of the leading teams, companies are having is that revenue is not just an outcome that happens at the end of the quarter and you report it up to Wall Street or to your board or whatever it is. Revenue truly is a business process that can be broken down and optimized. And of course, forecasting is a key sub-process of the broader revenue process. And so this is a useful segue to the main topic for today, control or be controlled, forecasting done right. Tell us, Mark, what your view, and you started to get into it, what your view of forecasting is, and maybe what forecasting isn't, and just talk to us about that.
Yeah, I think you've seen it a lot in my career. There's a reason they call it forecasting and not aftercasting. Reporting the news that's already happened is, not the same as, predicting what's going to happen. And that comes from, a lot of work, granular work from a sales standpoint and total go-to-market standpoint. It's, there's a bottom-up component to it where things are getting rolled up, but there's a lot of work that needs to happen from a top-down standpoint, from a management scrutiny standpoint and qualification. And it really starts with the foundation of, what is the process, sales process, how granular you are from a stage gate standpoint, driving that process and then digging into that process and being able to qualify whether you've earned the right to advance, to the next step of that process. And again, a lot of this it's nonlinear, but you almost need to build this 3D view of what's happening, not just across the business, but down to, each individual account, and being able to layer that and understand the nuances and differences in, across different teams, different geographies, different segments of your business. You might have an S&MB portion, an enterprise, a major national, global account type program. There's going to be a lot of nuances and knobs to turn when you're, scrutinizing and scrubbing and trying to get to, some accuracy in predicting the business. And one of the big problems that, over time that's happened with CRM, particularly Salesforce, that the tooling hasn't really been built for forecasting, in CRM. And what they have built is something that's kind of optimized the stage gate process piece of forecasting, but there needs to be another layer inserted on top of that from a deal qualification standpoint. That's kind of where the MEDDIC piece comes into play as far as how to scrutinize and qualify deal by deal across the business. So
before we started recording, Mark, you said that the mistake that you've seen many revenue leaders, but other executives make is that forecasting is not just this bottoms up roll up exercise. Talk to us about that. Why do so many people operate that way? And if it's not just a bottoms up exercise, then what else is it?
Well, as far as why they do it, I'd probably break it down into a couple buckets, lazy or stupid, but it's why they're not doing it. And that'll get you, ejected pretty quickly. The bottoms up is, if somebody's relying on a pure bottoms up, there's just so many differences and nuances based on the seller, based on the type of business that they're in. If, forecasting a global 2000 or Fortune 500 deal that's, a 7 or 8 digit deal, completely different than, a transactional business that might be, a freemium to premium or, open source, usage-based pricing, bottoms up type program, smaller transactions. And you really got to get down into what are your qualification criteria for the different nuances of whatever part of the business you're forecasting. The big thing, and this is where I've been as an early fan of Clary and several time buyer and implementer of the tooling, is the ability of being able to take what's coming bottoms up, having, that dashboard and all the tooling at your fingertips to go through the forecasting process by individual seller and or by different teams of managers, allows you to start to understand those nuances in a much more granular way and to start being able to make a management adjust at different levels of the forecasting process. That management adjust means I'm going to spread out my risk and or upside across a wider swath of the business. Case in point, some examples might be, my North American business is a lot easier to forecast because it's a lot more mature. maturity
Sure.
and, a lot more time on bike, a lot more, history and predictability. But we've, in the last, 3-4 quarters, we've been expanding over in Europe and maybe in Asia. I know that I'm going to have a different risk profile in the newer territories. I know I'm going to need more pipeline coverage in these other areas. So I'm able to spread the risk out across the different groups as a CRO, or even if I'm a second line manager across multiple regions, as well as be able to spread big deal risk out. I might have $5 million deals and the roll up got everybody committing all five. I want to be able to manage just that they're down, right? Or I probably will, and spread that across multiple groups versus just relying on a bottoms up forecast coming from the sellers and, or even, first or second line management, right? I mean, a lot of it's kind of like building out a puzzle, right? And scenarios and ranges in that risk as well. And given predictability, to not just, what's going to be the revenue, but that drives a lot of other pieces of the business, right? From a headcount standpoint and marketing investment, R&D investment, whatever it is. And then you throw in changes in a macroeconomic situations, which, we've been going through here recently. Your metrics that worked, 12, 18 months ago, they're out the window at this point. And, if you go look at the bodies strewn across the business, there's a lot of displacement that's happened with people that, couldn't make that adjustment and, or make those hard choices, and, or hard forecasting calls on what was happening in the business. And they just made them late, right? Which costs you on the burn side as well.
That's right. And we'll dive into those implications and kind of the 12 months ago versus today environment in a moment. But I want to quickly summarize what you just said, Mark, about the difference between bottoms up and how you augment that bottoms up call with other things that you have at your disposal now. Revenue leaders have more data at their fingertips, real-time data at their fingertips now in 2023 than they ever have before. And you have to understand what in all of that data is signal versus what of it is noise. And having a purpose-built revenue platform that allows you to do that, surfaces the right things at the right time, makes your life a whole heck of a lot easier. So you can take that bottoms-up judgment, apply your top-down judgment to it, as you said, spread the risk across, as well as look at the analytics that you have now to understand pipeline movement, pipeline coverage, industry trends, segment trends, whatever it may be, and triangulate a forecast that you have real confidence in. Is that a fair summary?
Yeah, I might give you, Clary a ton of credit. If you think about the old days, pre-Clary or Clary type tooling, a lot of this adjustment was and or management adjustment that was done, you're exporting things out of your CRM into a spreadsheet. You and your finance or ops people are spending hours and hours going through that type of data. Today, you can do it to save a lot of time. The other thing you can save is a lot of torturing of yourself, but also of the team trying to extract, verbally that data out, right? Because a lot of it's just not in there. Like particularly
Right.
the engagement data is huge, right? Well, tell us what's going on in that county. Well, you'd see. You don't have to ask if I've got the meeting. Well, it's the meeting's in there. The touch points are in there. The data's in there. All that engagement's in the system. So, it's just a lot more efficient and, it gives you the ability to have a lot more accuracy than, 5, 10, 20 years ago, right? Which was, very torturous.
Exactly. Are you telling me that reps don't like to be browbeaten and interrogated to get every little bit of information out of them? And then the information you do get, like during any interrogation, is not trustworthy. If you have to torture and interrogate to get out pieces of info, why are you trusting the output of that? You're just going to be, at the whims of the happy ears of your reps, and untrustworthy data is the output.
Yeah, without a doubt. And, in a lot of cases, it's, there is some, I would just flat out call it lying going on to justify existence. But it's not like necessarily that the rep is, intentionally lying to you. In a lot of cases, there's some lying that goes on to themselves or it's not just a rep. It can be a, happy ears sales management as well that, they're just talking to themselves, right? Or negotiating with themselves and hoping and praying and, having happy ears and hearing what they want to hear. But there's the other side of the equation as well. You got super conservative sellers or sales management that, you will, learn over time. And it's better that you don't learn the hard way, that you know it up front with data, that, they're too conservative. Somebody under forecasting can cause you just as many problems as somebody over forecasting as well, because that's just, that's going to throw off your predictability as well. So having the data at your fingertips and understanding how to use that data is super, super important.
I want to dig in on this, Mark, because I think this is something a lot of folks don't understand. That sentence you just said, that coming under your forecast can be just as damaging as blowing your forecast out of the water. Talk to us a little bit about the implications of forecasting. You as a COO, you've said that the forecast number is the most important number for the business. So talk to us about why, and talk to us about the implications of missing or making.
Well, you want to know, again, the ability, and this is why I've always loved this Clary solution, is being able to spread things out and forecast for the whole business. And, or if you're, on a regional or theater type sales leader, you've got all these just different people rolling things up. You want to be able to come up, and there needs to be multiple levels of adjustment before you get to, what's going to the business. Now, the business meaning, the e-staff, the board, and if you're public, out to Wall Street, new investors, it gets super, super important from an M&A standpoint. Having this, the believability and the trust is super, super important. And the more granular you can get, and the better you can go spread that risk out. If one group's under forecasting and then you have two groups under forecasting, but you have 5 over forecasting, right? You got to be able to, it's math. You got to go figure that out, right? And make those adjustments and spread that out, the spread of the upside out, and or spread the downside risk out, right? To get into that range of, what's going to happen. The other big nuance that I think people miss on in a lot of cases is they live inside the, what's right in front of them, that current quarter. It's a huge, huge mistake. And everything might turn out right in that quarter and or for a few. But if you're not looking at it, what the total pipeline is, I always advocated and operated when I'm operating on my own side, I'll always operate in a 5-quarter forecasting cycle. Very high scrutiny in the quarter you're in, but a rolling 5-quarter forecast to really understand what my health is in the pipeline, the slicing by stages and gates, the nuances by the different geos or territories, what's expansion, what can I really count on? It drives a lot of other things in the business as well from an investment standpoint, or de-investment and pivot and new strategy, particularly if there's economic issues, if there's regional issues. You might have a competitor that all of a sudden pops up and becomes super competitive in a certain area of your business. That could be, S&MB pressure, or it could be maybe a competitor coming from the top down from an enterprise standpoint. A lot of nuances, and that visibility of looking out and understanding what my coverage is, total pipeline, is super, super important as well, because you're not just forecasting, sort of that one quarter, or it could be monthly. Some people are more of a monthly cadence, right? Particularly in the usage-based or bottoms-up transactional type businesses, and more MRR focused, at least in the early days. So it's, like waking up every day and, that's the game plan, and it determines pretty much everything you're doing from an investment standpoint all the way to enablement. You've got a lot of enablement signals that happen with this type of tooling as well. You can actually see what's happening, with the recording of calls and the NLP, natural language processing type opportunities, and being able to feed that content at the right place at the right time for the sellers is super important as well. And, it drives a lot of enablement decisions from you constantly need to be looking at it, as well as, downstream on a customer success standpoint. A lot of signals to be looking at there, because, NRR is super, super important. Best place to sell something is where you've already sold something, whether that's an upsell,
Right.
cross-sell, or renewal, right? It all starts with the renewal from a net revenue retention standpoint, but layering on the new business, whether that's new products or the same product, and just expanding is super, super important, right?
And so what I'd love to hear now is maybe back at Signal FX or at Skydio, as you're operating as a COO, I'd love to hear about a time where you have this 5-quarter view, the current quarter and then the following 4. What kind of insight did you get? What kind of decision were you able to make or were you forced to make based on that forward-looking insight that you had?
Yeah, I'd say both are really kind of coming at an extremely low basis, low to no sales almost. So that 5-quarter type view, understanding how the total pipe is growing so you can start to get the metrics and understand when and where to start putting new headcount into play. And even before that, how to soften the beaches. When I say soften the beaches, where do I put the demand gen and marketing spend to go soften the beaches and build that pipeline, and also understanding how to expand, territories by softening the beaches with marketing spend, but also, all right, I have one seller in one region, pipeline's building up. They're starting to get extremely busy. The more, a lot of people and sellers will fight you, and even sales managers, it drives me crazy, will fight you. Well, I can't cut Johnny's territory, right? Because, he's so good and he'll get, angry and he might lose him. Johnny's going to get more productive working on less of the pipeline, understanding how your productivity model works, that, as I expand and hire new reps, and that, that second rep that's going to the territory is going to get productive a lot quicker because he or she is working on, some already started pipeline that Johnny started, right? And that Johnny's going to be more productive working on less accounts and penetrating deeper into those accounts than if they're just waiting for the bluebirds to keep coming in. That kind of data is super from an expansion standpoint. On the other hand, it can work the opposite direction, in a downturn, which, I think you wanted to talk about later. Here we've been, right? And revenue leaders that haven't experienced that, and, some of them maybe have experienced it in 08 or 09, but they were little, junior individual contributors, right? Or they're still in middle school, right?
That sounded like a shot at me.
Yeah. You're still living at home.
I just turned 12, Mark. I'm doing all right.
I don't know how old you are, but, you look young. But, what happens in those scenarios is, hey, look, you think of that 5-quarter pipe you need to be looking at. Well, your coverage has to increase, right? You're going to need more coverage. A lot of people might have in their head that, hey, I'm fine with this 3x coverage to go hit my quota, right? Quarterly, monthly, yearly. Well, it might be 5 to 10 now. How do you get there? Does that mean you're plowing more money into demand gen from a marketing standpoint? You're probably not giving the marketing team more money to go spend, right? Where am I getting the ROI? What's my attribution for that spend, right? Having that data in there from a historical standpoint, and then understanding, well, I need to maybe redirect that to more healthy parts of my customer base and or my target base. That could mean completely different verticals are healthier now. If you relied on crack cocaine the last few years, selling to, and or let's say not crack cocaine, carbs. If you're relying on just burning carbs the last few years and peanut buttering your forecasting and, expansion plans, and hey, 2 to 3x is plenty to go keep hiring more people. And then all of a sudden you hit that wall and you've been selling to all your, mostly down market to the high tech vertical. Well, guess what's the first one that dries up? Well, maybe I need to go where it's a little safer and the spend's going to continue. Maybe this is the opportunity to go move up market or into different verticals. Like, for example, if, you have some foothold into selling to the government hasn't stopped spending. If you have a federal business or a government business, maybe, those types of decisions, if you have the data and things have changed, allow you to go reallocate resources to different areas. I'm just giving you an example.
Yeah, of course. You index toward. And the key here is that you need the instrumentation to be able to spot the areas that are doing well, that deserve that indexation toward. And if you can't do that, then you're going to be flying blind. you're going to be burning money, burning cash, sellers aren't going to hit quota, and it's just this vicious cycle that repeats itself.
Well, it's not just a sales leader issue as well. It's marketing and marketing spend, right? If you think
Sure.
about ABM, account-based marketing and demand gen and what is their attribution and are they paying for themselves with these campaigns? Do I redirect that to where I know I'm going to be successful? Maybe it's back into our customer base to weather the economic storm and to really hug the customer or I have some expansion opportunities where that health is still, I know the spend health is still going to be there. And if it's blown up in a vertical, that might be the time to go build that new muscle, right? In another vertical versus just keep throwing carbs at it. Let's go put some muscle in something that's going to, when we come out the other end from a health standpoint, we're going to be a lot, bigger, faster, stronger as well.
That's right. And let's talk about this economic storm for a moment, because I'm seeing a lot of revenue leaders do, and certainly the instinct many of them have is we're going to take our eye off the prize of forecasting right now because we're in triage mode. I'm a CRO. I'm diving way back down into the deal level. I am putting my rep cape back on and I'm going to battle with these folks. I don't have time to worry about the forecast. It's survival mode right now. I'm in the deals. What do you say to that instinct? What do you say to revenue leaders who perhaps are thinking or operating that way?
Well, first of all, you should have already been in the deals. And again, from that management adjust capability that your tooling provides, the other big component of that is, divide and conquer, right? If it's me and my sales management team, any of the big, really important deals, I want to make sure I have executive sponsorship and alignment and activity going on. And there's ownership on the big, important stuff, in any economic environment. For somebody that maybe does what you just described, that's going to be short term, right? Because they're just not going to make it. And if they can't forecast, because I got to go get into the deals and I don't have time to do that. I mean, well, if you're into the deal, at least you can forecast the ones you're in, right?
That's right.
That's a terrible excuse and will get you fired very quickly, is what I would say.
Couldn't agree more. And now, in their defense, a lot of times the forecast process is so labor intensive, so time consuming that it's one of the first things that falls by the wayside when your time gets filled up with, all the other things that we're talking about in this tough macro environment. And so having a solution that allows for the ease of the bottoms up roll up, the top down judgment, the analytics that we talked about before is a huge unlock for leaders to keep that finger on the pulse and know not just what's happening this quarter, but also what's happening, as you mentioned before, in the future with, Q+1, Q+4, whatever it may be.
Yeah. I mean, you're taking a lot of the qualifying kind of questions and what I'd call, torture out of the equation to find out what's going on, because you can see it in the system. You can see it with the engagement. You can spend a lot more time on productive things like next steps, triage. How do I go triage a deal? Deal slip, like deal slippage is huge. Oh, the thing's going to slip, right? Well, let's triage, right? 3-alarm fire. What do we got to do? Quick deal review. Management gets involved and we got to figure out how we can get this thing back on track or competitive pressure, right? We didn't think we had it. All of a sudden we have it. The big one out there today is the do nothing competitor, right? We got to get real good competing against that son of a bitch, the do nothing guys, right? Because they're really good, especially now. The do nothing is your biggest competition right now. So what do we have to do? Being able to look in there, where am I at in the stage gate process? What are the best leading indicators? The other key place I like to spend a lot of my time on was the leading indicators from a health standpoint, particularly around the validation events, technical validation, as well as business case. You take a POC, combine it with an ROI diagnostic, you got a proof of value. What's going on in there? What's the health? How big's that pipeline? Because if I'm down that far, the other thing that people don't realize, just to simplify forecasting, is it's kind of like playing ball. There's a scoreboard, and on that scoreboard is, are you racking up the wins? There's also a clock. Do I have enough time to get through my stage gate process, to get through Medic? That's the beauty of Medic, is do I have enough time to cover all those things in the time period that I'm forecasting, right? And forecasting day one of a quarter is different than day 45. This is different than the last 2 weeks, right? And so that having, Clary type data at my fingertips allows me to triage a lot quicker when things are getting off track, right? And or allows, me to see problems that might be 2 or 3 or 4 or 5 quarters out, right? So I could take corrective action early and often versus, it's too late. If you're not watching the next 2, 3, 4, 5 quarters and how things are looking, and maybe you get behind or you get ahead on your headcount and your investment, you can hit that wall and it can cost a ton on burn. It can cost a ton on revenue. It depends on which wall you're hitting. And if you're not, putting the economy and or competitive situations, you're not factoring those into the equation. I see a lot of people just go splat, 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 splat.
I couldn't agree more. I have a follow-up here, Mark. This point that you just made, that the scoreboard and the clock, what are the differences between a day 1 forecast, day 45, day 89? How are you looking at things differently on those different time horizons?
Well, again, it gets into 4. I mean, what a lot of, you're waiting for that first roll up. First thing I do is start doing next quarter's forecast a lot earlier. Again, that 5-quarter view, and really driving the constant scrubs and really selling your teams on, hey, look, it's important that you run your business like you're the CEO, particularly for an individual contributor. It's just as important as well it is for a frontline sales manager, who I think are probably the most important people in the company, is that frontline sales manager, because they're they're kind of like the captains of the team, right? And when triage needs to happen, you want them to have the ball in their hands, right? But if you're not getting out in front of these things, it's just going to be too late. So you have to really have that granular inspection. If you're not inspecting what you expect, you're going to get, your butt kicked very quickly. What happens in these initial roll-ups is there isn't any scrutiny into it. There's no forcing or management adjustment. It's fine to go take a rep roll-up on day 1, and whether it's too high or low, if the management team, they can immediately start applying that management adjust to close gaps and or to, it might be too high. It might be too low. You've got the historical analysis done. You've got the total pipeline done. You know what your bigger deal equations and metrics look like. Your larger, enterprise business versus your transaction business. Understanding how all those layers work allows you to quickly go do that management adjust and start that scrubbing process as you go. You get into, mid-quarter and, you're on a weekly, daily cadence, up to that point, things will start to form and things may need to change. The ranges may change. And, versus the last few weeks, everybody always complains. It's, a lot comes in at the end and, sorry, that's just the way it is. But being able to pull things forward, takes a lot of the pressure off. But, bad news needs to travel fast so you can do something about it. And there's a tendency for people to hide that, right? And to hope something changes. But we can't do anything about it from an action item standpoint if we don't know about it. And having that, in the data, be able to see trends and problems happening and or things that are good happening can really drive a lot of what you're doing in the business from a management cadence standpoint.
100%. Yeah. Hope is not a strategy.
Not a very good one.
Last question I have. You sit on a number of boards right now. You're advising a number of companies right now. What kind of advice, but the primary listenership we have here are revenue leaders, mostly on the CRO, VP of sales type side. What kind of advice would you give to those types of leaders to navigate the current climate?
Well, it's so specific to the individual's business, but look, you need to do more with less. It's a tough climate out there, but you need to do, right? And you need to, fight through it. One of the best advice I can get is this is the time when a lot of muscle is built and or has been built, when the true winners punch through and start to shine. It's easy to make excuses, very easy. And you have very good excuses to make right now. But it's also a time when, your competitors, a lot of people are getting deals done because they're good and they have good solutions. They have great go-to-market programs and they can punch through the noise. If they spend their time in the right places, right? If you segmented and targeted and you know where you could be successful and you've got that scrutiny, forecasting can tell you where you should spend your time versus don't spend it on carbs, protein for muscle, right? Go build muscle through this process and come out stronger on the other end because the cream will rise.
100%.
And of course, Kyle, buy Clary. That'll help you get there.
We'll be sure to give you all the royalties from that little plug. You're building muscle now, but, scar tissue is pretty strong as well. And living through that and going through these tough times and getting burned every now and again, but building that resolve, that scar tissue, it's how you come out stronger on the other end. So that's really sharp advice.
Yep.
Last bonus question, Mark. I'm very curious to hear your answer to this. I have a sneaking suspicion it's not going to be anything we've heard from other guests. What would be a book recommendation that you would give to revenue leaders? Could be fiction, nonfiction, biography, whatever you want. What would be a recommendation for you?
Art of War, Sun Tzu.
Oh, why?
It's what we do every day. Look, you have to have an objective. You have to have a strategy. You have to have tactics. People confuse tactics and strategy all the time. Keep a little one in my bag. I'm not at my current home, but I keep a little one, on my desk. That's the one book I would, for any revenue leader. Sun Tzu, Art of War.
Sun Tzu, Art of War. I was right. That has not been recommended before. We get other recommendations that are pretty on the nose about sales management, things like that. And you're coming out of left field with a strategy book. I absolutely love it.
Grab the Bible and, but I'd stick to the Old Testament because we're in Old Testament times right now. This is not New Testament time. So.
Yes, exactly. We're all getting hit with plagues of locusts.
Exactly.
Mark Cranney, thank you so much for the time. This has been absolutely fantastic. Really, really appreciate you coming on.
All right, Kyle. See ya.
Don't let what you heard today go to waste. Take 2 minutes to download today's checklist to get your priorities in line for the week. You can find that linked in our show notes. And if you liked what you heard, make sure you give us a 5-star rating and leave a review. We'll be back next Monday with more to help you win your week.